Hello, and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today, we'll be talking about what's currently moving the markets. The economic calendar is a little bit thin today, so the main focus will be on the weak dollar and the rally we are seeing, especially the recovery from gold, silver, the pound, as well as the euro compared to the dollar. So we also be looking at the top highlights that are currently happening in the geopolitical scene, try to understand how this is impacting the markets. And once we do this, hopefully everyone will trade from an informed perspective. So as always, remember, this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence and practice proper risk management. So to begin, we'll be looking at the economic calendar, try to understand what are the prevailing events. So then give me a sec. So as you can see from the economic calendar, we don't have much that is happening as of this morning. So today being the Thursday, the 19th of February, early this morning, we had a job data coming in from the economy of Australia. So on the jobs report, it was a mixed outcome. So on one side, the number of new jobs created in the past month was lower than expected at 17.8k jobs. This missed the expectations of 20k, but also missed the previous reading of 68.5k, which was revised higher from the prior number. The prior number in this case was 65.2. So on the other hand, we had the unemployment rate remaining at 4.1%, where the market expected it would rise to 4.2%. So we'll be looking at the market reaction data, where the Australian dollar strengthened against the US dollar. Then last night, we had the FOMC meeting minutes. This was a key highlight, especially owing to the current weakness in the dollar. And these minutes were pretty important because they are driving the markets today. So looking at the Fed minutes, lower inflation needed before many officials will support rate cuts. So inflation on the US economy has been quite a headache. So we'll be trying to understand the trend in the US inflation. Then once we understand this, then we move on to the rate expectations. So trying to load the US inflation data. And as you can see, as per the prior reading, in January, the inflation rate in the US was 2.4%. Remember that the Fed target is 2.0%. And the gap we have here in the month of October was because of the US government shutdown that happened last year. So just moving this to a much bigger time scale, in this case, 5-year period, we know that inflation peaked at 9.1% when the US was hiking interest rates. Then last year, we started seeing the US cutting interest rates. And this is when inflation was on the fall. At some point, we got to 3%. And now inflation continued moving lower. And in September 2024, this is when we had 2.4% inflation in the US. And this has continued moderating somewhere around 2.7, 2.8. But then in the prior reading, it was at 2.4%, meaning that inflation is progressing towards the Fed's target of 2%. So with inflation moving towards the Fed target of 2%, now the downside risk remains on the other side of the jobs. So the jobs side or the jobs mandate is now very important to the Fed. So according to the Fed minutes, many Federal Reserve officials want to see inflation fall further before they will support additional interest rate cuts this year, particularly if the job market continues to stabilize, minutes of last month's meeting show. The vast majority of the 19 participants in the Fed's rate setting committee say that there were signs the job market has stabilized. after the unemployment rate rose in late 2025. The minutes said, and most of the officials agreed that the Fed's key rate is close to a level that neither stimulates nor restrains the economy. The minutes were released on Wednesday, 3 weeks after the central bank's Jan 27 and 28 meeting. Fed officials at the meeting agreed to keep its key rate steady at around 3.6%. That's around the midpoint of 3.5% and 3.75%. After cutting it 3 times late last year, two officials, Fed Governor Stephen Miran and Christopher Waller, voted instead to cut another quarter point. So clearly, it's only two members that are going for rate cuts. The rest of the members are considering holding interest rates at the current level. And that drove to the weakness of the dollar, owing that there's still signs of weaknesses in the labor market. And that would most likely push the Fed to implement further rate cuts. So other than that, looking at today, we are having one more data point that could potentially move the market, and that will be happening at 4:30 p.m. And this concerns the US economy with a main focus on the weekly unemployment claims and the Philadelphia Fed Manufacturing Index. So when we focus on the Philadelphia Fed Manufacturing Index, we are looking at one of the top manufacturing states in the US and try to understand the trends in that state. So normally, it's usually a leading indicator of the overall manufacturing in the US. So if manufacturing is on the rise and showing healthy movement, then that boosts the confidence in the US economy. We expect that the overall manufacturing for the economy will be better. So as per the prior data, we saw 12.6. Remember, values above zero are considered to be expansionary and below zero to be contractionary. And in this case, as per the prior reading, we had 12.6, and we're expecting a slight reduction to 7.5. So any values above 7.5 would mean that manufacturing is doing well in Philadelphia, and we can project this to the US economy. And then values below these would mean that manufacturing is weakening, and in that case, negative for the US economy. So this tends to be positively correlated with the dollar. So a strong manufacturing index basically shows results in a strong dollar, and the opposite is also true, where if the manufacturing is weak, we also tend to see weakness in the dollar. And as you can see, the expectation for today is a drop from 12.6 to 7.5. So as per the unemployment claims, we know these are people who are filing for unemployment insurance for the first time. It's a weekly data point, and as you can see, for the last couple of weeks, we have had a consistent rise in unemployment claims, which shows some underlying form of weakness in the job sector. And this weakness could result in the Fed implementing further rate cuts, and that could be weakening for the dollar. So a rise in unemployment claims would mean that there's further problems in the US economy, especially the job sector, and that would result into a weakening of the US dollar due to expectations of further interest rate cuts. So other than that, we don't have any other major news besides the pending home sales data later at 6 p.m. Conference board leading index month over month at 6 p.m. All these are low impact news, but also we'll be having the weekly crude oil inventories data at 8 p.m. So we're expecting a big draw compared to the previous reading, where there was an increase of 8.5 million barrels in US crude oil stocks. So if the crude oil stocks increase by 1.7 million, that would be a slower increase compared to the previous week. So this would mean that inventories are not growing as much, and in this case, it indicates some form of scarcity, which would lead to rising oil prices. And at the same time, if we get a much lower number than this, we could be seeing oil accelerating higher. On the other hand, a big increase in US crude oil stocks would mean weaker oil prices. But then the other key drivers in oil prices, which include the current tensions between US and Iran. So as we had mentioned yesterday, we had seen a lot of talk between the US and Iran. There was negotiations that were really doing well, but then this later turned out to be negative, and now there's tensions between the US and Iran. So the US renews threat of military action as Iran, Russia announced naval drills. So this is coming in from Al Jazeera. So the United States has issued new threats against Tehran after a second round of nuclear talks, as Iran and Russia announced joint naval drills in the Sea of Oman to deter any unilateral action in the region. White House Press Secretary Karine Leavitt said on Wednesday that Iran would be very wise to make a deal with US President Donald Trump after indirect talks in the Swiss city of Geneva ended without a significant breakthrough. So in a later talk, Leavitt told reporters that while some progress was made on Tuesday, we are still very apart on some issues. Trump, who has deployed 2 US aircraft carriers and thousands of troops to the Gulf region, escalated his rhetoric on social media. Should Iran decide to make a deal, the US may need to use an Indian Ocean airbase in the Chagos Islands in order to eradicate a potential attack by a highly unstable and dangerous regime, he wrote on his Truth Social platform. So what we have seen as the market reaction to this is increased demand for safe haven assets. So on one side, we saw gold and silver making a very strong recovery yesterday, and that is extending through today. Also, at the same time, these threats, especially around the Red Sea, basically make oil expensive. So we have also seen a rally happening in both Brent and WTI crude oil. So other than that, looking at the currency's performance as per this morning, the Australian dollar remains keen, up 0.35% against the dollar, New Zealand dollar 0.27% against the USD. The euro, Canadian dollar, pound, Swiss franc, and yen are also slightly higher than the USD, indicating that the dollar is the weakest currency as per this morning. So also looking at the stock market performance as per yesterday, big tech was largely in the green, with companies such as Nvidia being up 1.63%, Microsoft, Apple, Amazon, Tesla, Google, and Meta also showing some slight gains. But then there were some of the key highlights, including Micron, which was up over 5%, in this case 5.29%, and largely the market was in the green. So the energy sector was also particularly doing well, with companies such as ExxonMobil being up 3%. On the oil and gas exploration, we also had a majority of the stocks being in the green, and also midstream companies in the energy sector doing really well. So majorly, you'll notice that most of the companies in the energy sector are doing well. So clearly, there is a strong bets that oil prices will be recovering in the near future. So other than that, you can see an update from Trump on Truth Social as per yesterday. The United States trade deficit has been reduced by 78% because of the tariffs being charged to other companies and countries. It will go into positive territory during this year for the first time in many decades. Thank you for your attention on this matter. So clearly, Trump is basically banging the drum, celebrating that the trade deficit between the United States and its trade partners has reduced by 78% and could be getting to over 100% reduction by the end of this year. And this basically shows that his actions on tariffs have been working to the benefit of the Americans. So on the other hand, Bank of Japan is expected to reach 1% by mid-year as yen intervention risks rise to near 160 in USD JPY. So rate expectations shifting toward mid-year tightening support Japanese yields and may limit sustained yen weakness. However, rising intervention expectations around 160 create asymmetric risk for USD JPY traders. So all 76 economists expect the Bank of Japan to hold rates steady in March. So we don't expect a change in the BOJ rates in the month of March. So majority now see a 1% by end of June, which means that we expect one more rate hike from 0.75 to 1%. Growing concern about fiscal expansion and yen weakness. So yes, there is that perceived yen weakness and whether the Bank of Japan will be looking to intervene. So that is becoming a growing concern. And out of the economists surveyed, 69% expect currency intervention if USD JPY gets close to 160. So inflation risks and wage growth keep tightening buyers intact. So in this case, we know that inflation has remained significantly high in Japan. Wage growth hasn't kept up, and that is causing concerns again. So main focus will be on whether the Bank of Japan will be hiking interest rates in the month of June, and that would likely cause a rally in the JPY. So other than that, trying to see if there's any other highlights in the market. Fed policymakers split over next move or moves on rates. European stocks ease from record highs. Indonesia leaves rates unchanged. Swiss trade surplus expands in January. Turkey consumer mood index hits 11-month high. Philippine central bank cuts rate as expected, and Dutch consumer morale slightly weakens. So clearly, no strong highlights. But then, as you can see, for crude oil, WTI is up 1.75% as of this morning, whereas Brent is up 1.58% as escalations continue happening between US and Iran. So gold and silver are also up 0.78% for gold and 2.02% for silver. And this shows a demand for safe haven assets as we see risks happening, especially in the stock market. The investors are basically avoiding the AI trade, mainly because the capital expenditure by the top AI stocks showing that there's a lot of investment, but investors don't see returns happening in the near term. So as a result, there's some kind of rotation happening across stocks, and this rotation is leading to investors buying other defensive stocks and at the same time going for safe haven assets. So as you can see, for US interest rates, we had 3 rate cuts as per last year, dropping to 3.75%. So we should be expecting further rate cuts, but then that really depends on US economic data, and that means inflation getting closer to 2% target, and at the same time seeing a weak job market that would lead the Fed to going for rate cuts. So as the Fed said, we are going data by data, so the next US non-farm payrolls will be very important for the Fed. Trying to see if there's anything else we may have missed. So a recap of the Asian session trading today. Stocks rallied in Asia with tech shares leading gains as concern about the valuations of AI firms eased. Samsung Electronics company shares surged to a fresh record. So the MSCI Asia Pacific Index ended 0.4% with South Korea's Kospi climbing to a fresh record high. The move forward gains on Wall Street, where the SP 500 rose 0.6% and the Nasdaq advanced 0.8% on Wednesday. The AUD strengthened after solid employment figures, while oil prices steadied following their largest single-day jump since October. The recovery in tech shares signaled that worries about AI-related disruption were beginning to fade, as several investors pointed to potential buying opportunities. Sentiment was also supported by reports that OpenAI is nearing completion of the first stage of a new fundraising around what could exceed $100 billion. The regional MSCI benchmark has risen roughly 12% this year, led by the surge of more than 30% in the Kospi. By comparison, US equities have moved largely sideways, with the SP 500 little changed since late December. So clearly, one of the top gainers was Samsung Electronics as of this morning. China, Hong Kong, and Taiwan remained closed due to the Lunar New Year, and this is a Chinese New Year holiday. Usually takes around 2 weeks before they reopen the markets. So the Australian dollar climbed against all major counterparts after data showed the job rate held at 4.1%. defying expectations for a rise to 4.2%. The currency gained as much as 0.4% to 70.71 US cents. Gold was little changed, hovering about 49.70 an ounce after bargain hunters stepped in during the prior session following a two-day slide. In Japan, demand for a 20-year government bond auction came in below 12-month average as falling yields and Prime Minister Sanae Takaichi's election win reduced investor appetite. So other than that, I believe we have covered pretty much of the key highlights that we expect to see in the markets as of this morning. The calm before the storm, geopolitics had slipped somewhat into the background of financial markets, which in recent weeks have been fixated on corporate earnings and fears of disruption from AI. Yet, tensions between Iran and the United States returned to center stage yesterday. The backdrop triggered a market rebound in oil prices, though it did little to derail the advance in equity indices. So remember, the second event of the Bullish Banter podcast is happening this Saturday. So if you haven't booked your spot, make sure that you book today. I'll provide the link in the comment section. Make sure to sign up. Let's meet at ALX Westlands. Remember, it's a free event where we get to talk about markets, all markets, from the Nairobi Securities Exchange, from Kenya Pipeline Company, IPO and shares, the ZD new FXPesa app that investors are using to access the Nairobi Securities Exchange stocks. So we also have experts talking about offshore stocks, forex trading. We'll be looking at equities trading, gold and silver, and at the same time we'll have an expert talking about the cryptocurrency industry, the trends, major shifts happening. So all these will be happening on Saturday. So make sure that you book your slot. Let's meet there. The link has been shared in the comment section. So from there, you're able to sign up and get your seat booked. So also, on top of that, if you're just a beginner and you're trying to understand what is all these charts we're talking about, then you need to check out the Novice to Pro course. It's available on FXPesa YouTube. Here you'll get to learn from introduction trading, charting skills, tradable assets, knowing your candlesticks, market structures, trading strategies, risk management, understanding market news, building a trading system, and eventually how to trade like a pro. So make sure to check it out and learn how to approach the markets. And still on the Bullish Banter podcast, make sure to check out our latest episodes where we cover different traders as well as different market analysts as well as economists. So in the latest episode, we featured Johnson Derry. So make sure to check it out. Leave us feedback, comment, and let's continue growing together. So with that, I believe we should be able to move on and get into the technical analysis section of our presentation today, where our key highlight for the day will be the strong rally in oil prices following the tension between the US and Iran. So clearly, you can see as per yesterday, there was a very strong rally in oil prices. So Brent opened here and closed around here. By the end of the day, up over 4%. And then from there, notice how after market opened today, we are up over 1.75%, and the market doesn't seem to be stopping. So in a span of what I would say 2 days, oil prices are up 5.89%, and this is only just the beginning. We would be seeing some further upside, especially considering that these tensions threaten the pathway for a majority of global oil. I would say a good chunk of global oil that goes through the Red Sea is in danger right now, and those concerns are driving oil prices higher. So currently at $70.98 per barrel of oil, there is a good likelihood that we continue seeing more bullish momentum. So pullbacks today will be taken as a potential for further entry points for the bullish momentum. So on the gold side, yesterday when we were doing the session, this is what was happening, and we discussed the potential that this was not a reasonable expectation that the market would fall further back downwards, but only a slight pullback before the continuation. So it played out as expected. So after the session, we saw the market bottoming here and then making a strong rally, about 2% gain from that bottom. Then later on towards midnight, we had a slight pullback, and as we got into the Asian session, notice how after the pullback we have a strong rally, with the market rallying 1.17%. And now as we enter the London session, there's more likelihood that we will continue seeing gold being pretty bullish. So the next target is around $5,045 per ounce of gold. So clearly, we have had this small pullback here, but then if we see more momentum in the London session, then the expectation is one more push to 5,045. So silver also experiencing some good momentum from yesterday. So after days of weakness, you can see how silver was largely dropping. Yesterday turned out to be pretty bullish. So as we were discussing the potential rally yesterday, the market was moving sideways here, then a strong rally during the New York session, and then later a bit of a drop. This morning we've had a continued rally, got to our first target here, and now we should be focusing on a mean reversion or reversion to mean. And in this case, it implies a potential rally to where this big sell-off started, and that was $82.37 per ounce of silver. So having covered gold, silver, and oil, now we can cover the top 3 US equity indices, beginning with the Nasdaq, which has been on a rally. So after getting to this resistance, this is an area where the market was unable to break for the last 3 weeks. And now this being the 4th week, after we go to that resistance, the market was unable to move higher, and there was a bit of a sell-off towards the end of the day yesterday. So today, even if we have seen an attempt to move higher, you can already see how the London Open is happening. So clearly, we could be having yet another bearish day happening in the Nasdaq index. So for the Dow, despite hitting new all-time highs in recent days, here we can see that the last couple of days haven't been particularly bullish or bearish. It has been more of sideways movement or sideways momentum. So despite an attempt to push higher yesterday, there was a bit of a sell-off, and today there seems to be more pressure to the downside. So it seems like the market is a bit bearish for the day. And now looking at this, you'll notice that yes, we got into a new high yesterday, but also there was this sharp drop that happened at the New York Open. So we could be seeing the market going for that particularly low area. So good chance that we see the market retesting yesterday's low. So that would likely imply a push to 49,426. And for the SP 500, this was our target. The area that was acting as resistance, market attempted to break higher, failed, and now we should be looking at potential retest of yesterday's New York session low. So the New York session low is somewhere around $6,844 per share. So on the other hand, Hang Seng market is still closed. So we look at the UK 100 index, which hit a new all-time high yesterday. And then today, or as of this morning, we are seeing some pullback. So if it's a reversion to mean, then after we saw this strong bullish momentum happening on the break yesterday, then we could be seeing a retest of this area here, playing out towards 10,581. Though our positions are much better suited for bullish direction, given that the market is basically flirting with new all-time highs, which we just hit yesterday. So pullbacks are value areas to be looking for more buy opportunities. So the Nikkei 25 index managed to break above this particular trend line and now is pulling back. So the area where we had the breakout is around here. So potentially we should be looking at a market that goes down, and then we observe for signs for bullish entry. So if we see buyers coming back in, the idea is to be looking for bullish positions, given that this is also an entirely bullish market. So it doesn't make sense to be looking for a lot of selling opportunities when we know that at some point we should be expecting the market to bounce. So on the weak dollar side, we had this range yesterday. We talked about the breakout. I remember somebody asked on when we should be confirming the break. So we mentioned about candlesticks, and as you can see, we had small candlesticks attempting to break here. This didn't make sense to go for an entry, but the big green candlestick here with the return to no tails was indicative of the breakout, and these led to a strong rally after the break. So this is following days of sideways momentum. This is 6 straight days when the market was moving sideways. Then that led to a strong rally. But then we're not done with the rally. Yes, there is some form of pullback playing out. And at some point, we should be looking at the market retesting these areas here. So after the breakout, you can see we broke that level. Currently, we are going for a retest. And that retest implies that we should be looking for a continuation in the direction of the break, potentially moving towards the prior highs. So this is an idea to be looking out for, where the market could potentially bounce from here and continue moving higher. So for the dollar trading against the Swiss franc, we just broke above this particular trend line. So the market was really unable to breach that 2 days ago. Yesterday attempted to break, and now we are trading on the upper side. So there doesn't seem to be increased momentum, but the thing we know is that this is a book pattern, and whenever there is such a break, you expect a push to the top of the pattern. The top of the pattern is 0.78174. So we're on the lookout for momentum here, and that momentum hasn't happened yet. So we wait and see. So Euro USD bouncing off this support level is very important. Remember yesterday we talked about the euro potentially dropping to this level, 1.17806. Now we are seeing a strong bounce happening here. So on the 4-hour time frame, this is how it looks like. So this was a key level support. That's why it was at our target. And now we look at the market potentially moving back to the upper side of the prior range here. So 1.18373. So on the 1-hour time frame, there's still more room for upside potential. You look at pound USD, it's the same thing. So we had a key level support here. Market attempted to breach that support earlier in the week, failed, and now also yesterday attempted to breach again, failed, and now we are back with the same books. So this implies a likely rally back to a previous high around 1.35675. So for New Zealand USD, we're also seeing a very strong rebound from the day's low. So given the strong bearish momentum we had seen yesterday, so this is much more of a recovery. So yet there is a key level here. The market is retesting, and this level could be holding as a key level resistance. So we observe and see to see if the market pushes above that. And if there's a push above that, then we should be looking at this bounce that happened yesterday. It was the New York session high, so potential extension here. But then this area highlighted in yellow could be acting as the resistance as per today. So the dollar trading against the Canadian dollar managed to pull back here and then make a strong rally, as we discussed yesterday. And then today, after hitting that resistance, we are seeing the market pulling back downwards. So the pullback seems to be pretty strong with the Canadian dollar strengthening in correlation with oil prices rising. So potentially, we could be seeing another retest of this area around 1.36413. So for AUD-USD, still in a range, pretty clear that we are on a move towards the upper side. So in this case, it's pretty easy to understand that we just got from the lower side of the range, we're moving to the upper side of the range. The dollar is weak, and the target is 0.70978. So on the BTC side, it still continues with this channel. So patterns within patterns, and the current pattern we are seeing here as we continue with this bear market is some further drop here. And as we all know, with BTC cycles, if you're in a bear market, that's when you start looking for bargains, looking to acquire some BTC on a cheap. And then when the market eventually makes a rally, then you're able to make something for yourself. So clearly, as you can see, this is a pretty sharp drop of around 52%. And with the current price level, it's about 46.92%. Basically, entering value territory. So on European equities, we had the DAX breaching this level here and hitting the target we had identified yesterday. And now, after that happened, we can see the market immediately reversing, which means that we are looking for a retest of $25,092 per share. So most European stocks are taking that step back. So if you look at the EU 50 or the Euro Stocks 50, so we had this move completed, and now we are seeing the market falling sharply, and now potentially a retest of this area here for today. That's around $6,052 per share. So for the French stock market index, we have a double top pattern here. So in a double top pattern, we basically look forward to a completion of the pattern. The pattern is usually an M shape, so a move up followed by a move down to what we understand as the neckline, then a move up, and the proceeding move going all the way back to the neckline. So this might be very interesting trading and looking for opportunities to short the French 40 stock market index. So the Swiss stock market index also opened with a gap. So potentially closing the gap might be an idea for the day. The Netherlands stock market index also trading in a range. So we are getting dangerously close to the upper side of the range, which would imply a drop towards the previous low. So high-grade copper futures are bouncing strongly, as we had discussed earlier in the week. So despite the sharp sell-off that we saw weeks ago, what we are witnessing in the markets today is some form of bounce from these support areas here. So if we identify this region here, and then you look at the forward time frame, the market has been finding some really good support here, and we just bounced from there. So yesterday was a pretty bullish day. We could be seeing an extension of the bullish momentum today. And lastly, for platinum, we eventually have that one break we've been waiting for. So having broken out of this consolidation in a triangle, now we are trading above it, which implies a likely rally happening. So for short-term targets, we should be looking at this area here. It's mid-triangle. This was the most recent high. So a potential push towards this price action area of 2,194 price level. So that is all. I'll be checking on the comment section to see if there is any questions. Respond to the questions as we approach the end. So I can see Nderi is in the house, Limo Omaloa. Thank you guys for joining. You can see Robert Kovale. There is a question about ZD. So yes, I saw some research showing that the complete trade in NSE stocks using the ZD trader has an estimated cost of about 3%. So imagine paying 3% for just one trade. So it's significantly high. So it basically means that all this marketing you are seeing, especially on your SMS and everything, could be, I could be wrong, but the most likely scenario is that they are not marketing this company, but rather they want more participation in the NSE. And if you're paying 3% tax, it's not a tax to the government, it's a tax friction that you pay for the transactions. 1.5% when you're buying and 1.5% when you are exiting, means that they are targeting trading fees. So all this marketing is to have more participation, and the company is facilitating the trading, making all this money from more participation in the market. About the KPC valuation, that's a whole different story. So this is a pretty good question. I opened an account and I don't know how to do next. So kindly check out the Novice to Pro series. This is available on FXPesa YouTube. You should be able to see it here. Trying to share this. So if you're trading on a desktop, this should give you a pretty nice guide. It's called the Novice to Pro series. If you're trading on a laptop, then make sure to check out guides on how to use the FXPesa Equity Trader app. And you can always reach out to us on our socials as well as on our website. We have a live chat. We also have an email, support@fxpesa.com, and we'll give you a guide on how to use the platform. So make sure you start with your demo account, practice on it before you go on a live trading account. So we'll be willing to support. We also have our Zoom classes. You should be able to see a link for our Zoom classes on our website, as well as on our socials, especially on TikTok, Instagram. If you click the link on bio, you'll see our free live classes that happen every day. From there, you're able to learn the basics and build your trading skill. So morning, Lucy, I can see hot moves on Nairobi Securities Exchange. It's just the same as all other markets, liquidity. So when more money is flowing into the NSE, then prices tend to move higher. When more money is leaving, prices tend to go lower. So demand and supply dynamics apply equally. So good question. After the FOMC minutes last night, what is the general direction of the USD, strong or weak? Clearly, that's the title of the session today. These assets are gaining against the weak dollar because the US labor market being shown in a form of promise. There seems to be weaknesses across board, which would push the Fed to go for rate cuts at some point later this year. So last comment here. My question today is, first of all, thanking you and Robert Mbogo, who taught me how to trade back in 2023. 3 years now in the business. My question is, I find myself not holding profit for, I believe, for long. So the idea is about trust. You have to trust yourself to hold on to a winning trade up until it gets to your target area. Don't be overly aggressive. Be reasonable with your profit targets. But then it's an issue of repetition. Most likely, if you are uncomfortable holding on to a winning trade, you're probably taking too much leverage. So maybe lower your lot size and then hold for longer. For instance, if you, let's say, are trading 0.01, you're able to hold a trade for longer. You can even sleep on it. But then if you're trading a much bigger lot size, you can be a bit uncomfortable. So if you have winning trades and they make you uncomfortable, probably lower the lot size and take risks that are within your limits. Along of which, after getting out of a trade with small profit, my trade always goes to take profit. So this makes more sense to lower your lot size and then let your profits run. So yesterday, FOMC meeting, it was not the meeting, those were meeting minutes. Those were minutes of the prior meeting, and it was hawkish. Gold and silver, however, soaring today. Silver up 2.6%, gold 0.8% so far today. It's mainly because it was only two members that were going for rate cuts. But then on the next meeting, there will be key focus on the labor market. And inflation showed considerable progress towards the 2% target, basically falling to 2.4%. So clearly, the path is very clear for the Fed going for another rate cut. So that's why we are seeing a weak dollar and other markets taking advantage of the same. So also a comment from Omalo. Would we say that Iran geopolitics has overridden yesterday's FOMC hawkish meeting? Yes, I would say the key market drivers of today is US-Iran tensions with more liquidity flowing into oil markets. So you can already see oil prices being on the rally this morning. Good morning, Naomi. Even if you are late, these sessions are recorded. You can always rewatch after the session has ended. So make sure to rewatch the whole video in case you missed something. And also, thank you for joining. Thank you, everyone, for your participation. I hope to see you on the next session.